Hi, traders. Welcome to our first episode of our Traders Podcast. So, today we welcome Dylan as one of our Trade Club members to discuss trading, talk about trading. Let's talk about some of the common behavior, mistakes, or even failures that every trader have to go through in order to become an experienced or elite trader. So, hi, Dylan. So, let's introduce yourself. So, what's your name, background, and everything?
Hi, my name is Dylan. I'm from Malaysia. This year I'm 23 years old and actually just graduated from bachelor's degree in marketing last year. So currently I'm actually working in a marketing agency. So I'm a full-time performance marketer and should say full-time trader as well. So I come from a family of four. So it's me, my older brother, my mom, and also my dad.
Okay. So, when did you first start trading, Dylan?
Oh, okay. So I initially didn't actually started trading Forex. So my first time trading was actually trading crypto. So I first started trading crypto when I first graduated early of last year. So how did I go about crypto? It was I actually heard from a friend who was making around 5 to 6 figures per month trading futures on crypto. So what I did, I actually talked to him and then asked him about it, and then that was when he introduced to me the futures crypto market. So actually at that time I was already actually invested in like crypto, in sports, in like BTC, Ethereum, and those alts and whatnot. So at the time I was quite skeptical in terms of like futures market, and then I heard it was really hard to like be profitable, and it was really hard to learn as well. The learning curve was really steep. So but actually the main reason why I started trading was, as I think majority of everyone, it was to get rich lah basically. So if I thought like my friend could do it, like why not I? So that was the first reason why I started trading, basically.
So basically, the main reason why you started trading was because your friend made a lot of money. That's why you want to jump into trading as well, right?
Yeah, correct.
Yeah,
So he was making around like I think close to 100 200k ringgit lah per month. So that was
per
when like
month.
I feel like, oh, maybe I could try it out as well. Maybe I could earn as much as him. Yeah, so I
Okay.
think potential was there. So that was when I actually tried to started to trade lah basically. Yeah.
Okay. So for some of the audience, you may not know, 200,000 ringgit is about 40 to 50,000 US dollar. So, but besides that, your friend made a lot of money from trading. What are some of the motivation behind you started trading? It could be because you didn't earn enough money from your 9 to 5 job or something else.
I think mainly during that time I was like looking at maybe something that could give me like financial freedom. So during that time, a
Yeah.
lot of my friends was like working 9 to 5, going to office,
Mm,
like time restrictions.
yeah.
So I thought like trading was something different because my friend he didn't have like a 9 to 5 job as well. So he was full time trading. So he could enter a trade like maybe like when he was outside, when he was at home, and like anywhere else he could just enter a trade. So then from then when I went out with him, he was like, oh, he showed me his position. It was like 40k USD profit during that
Yeah.
time floating.
Yeah.
So at the time, like, whoa, I feel like this something different compared to what all my other friends doing. And also, it's a path that is not a traditional path. So that was what motivated me to like pursue trading. It was like it could give me financial freedom and like location freedom and also time freedom. I think that three aspects was what made me hook onto trading. Basically, yeah.
Yes. So Dylan brings up a very good point as well. Why did I first started trading was also because of the same motivation, right? Trading doesn't just give you financial freedom, because if you talk about financial freedom, a lot of high income job, for example, if you are a director, if you own any sort of retail businesses, if you run any sort of any physical stores, they will still give you financial freedom. But why is trading so different is because it gives you the ultimate freedom. For example, you can trade with a laptop. As long as you have a laptop, you have a mobile phone, you have a Wi-Fi, that's it. You can start trading. That's why I always say trading gives us that kind of freedom that not many other industries are able to provide. Okay. So right now, are you a full-time trader or part-time trader? No. Yeah.
I think I could say it's full time. I could say it's part time because I'm
Mm,
actually working as a marketer and also as a trader. So I do it simultaneously. I don't. It's not like, oh, morning I trade, like at night I do marketing. So I basically
Mm.
intertwine, but I strategically manage my time properly. So it could be, I could say it's full time trader as well. I think because I put in almost like, I would say 6 to 8 hours a day in terms
Mm.
of trading. So I think it can be considered as full time as well.
That's because your current full-time job is a lot more flexible, right? But for some of the people, let's
Yeah.
say they work in a restaurant, they work in a bar, whatever, they won't be able to do it like you, right? Assuming.
Yeah, it's correct. I think because I'm at home most of the time and I'm in front of the computer, I think I got that
Yeah.
flexibility in my job as well. I think that provides me um a bit more time to focus on trading as well. So I can consider it as full time.
So for some of the people wondering if they have a 9 to 5 job, but they also want to pursue trading, do you think it's possible?
I think it is possible, but it probably sets you back a little bit more. You probably need a little more bit more time to like um become profitable, I would say. Because trading is not
Yeah.
something that you can learn overnight. Something that takes probably years, months to even get a little bit of money from it. So trading is, to me, I think it's possible, but probably you just need a little bit more time compared to going full time, I think.
Okay. So also, I believe a lot of the audience would like to know, how do you compare your current job versus trading? Which one is more difficult from the technical side or from the psychological perspective?
Hmm. Yeah, let me think. Just I think just give me think 1 minute. Hmm. Okay, I think compared from my job and also trading. So I think what the difference is basically trading is a psychological thing. So what makes
Mm.
trading difficult is basically the psychology and also basically overthinking and also doubting yourself probably actually affects a lot of your outcome of your trades. So basically, if
Mm.
you don't follow your plan and let's just say you enter a trade, let's just say you exit early, and let's just say you exit early and then later on you regret because actually price actually hits your target. So I think that's basically what makes it difficult for trading is basically the psychological aspect to it. So for me, I actually always hesitate when I tend to enter on my setup. So when I hesitate, I actually miss out on a lot of golden opportunities. So I think what makes my job different than trading is basically the psychological effect and also the mindset that trading actually requires you to have. So let's just compare to my job like marketing. So actually marketing is much more of a technical ability, I would say. So marketing, actually you need to know like what strategies might work for a brand and actually what strategies might not work for a brand. So for example, let's just say one brand, we run a monthly sale for that brand. So that monthly sale is actually to boost sales and also increase their engagement and stuff like that. But let's just say I use this strategy on another brand, it might not work because it's basically something technical for each brand. There is different ways to improve their sales. So in terms of that, I think um, trading is a bit more psychological aspect and also mindset based. Whereas marketing for me, it's more technical. So it's more to creativity and it's more to understanding and identifying ways to actually help a brand. Whereas trading is more to you yourself, your mindset have to be strong, your psychology have to be according to your plan. So I think that's what makes it different. One is more towards psychology, one is more towards technical ability, I would say.
Yes, exactly. Because one of the common question that a lot of people think is, hey, trading is unlike any other industry. But I partially disagree with this. For example, if you're running ad marketing, right, you somehow still have to identify the market patterns, right? You have to identify some sort of consumer pattern. And trading technically is somehow the same thing from a technical perspective. As a price action trader myself and also Dylan, we have to always remind ourselves to first thing first recognize pattern. Second thing is identify market structure, and that is somehow similar to some of the job. For example, like ad marketing, you have some sort of pattern in the market. Same goes to the other industry. All right. So the main reason why I ask this is because a lot of people say trading is impossible to achieve. Do you agree with this statement?
Impossible to achieve. I think it's not really impossible to achieve, but I think it's basically how much are you willing to sacrifice is a thing that basically most traders really have to ask themselves, I think. So most traders have like the mindset of like, oh, I want to get rich quick. And then they think like they're better than the ones who failed. But actually, for me, in my opinion, after I've been trading for at least like 2 years now, I think what makes a trader profitable is basically how much they are willing to sacrifice, how much hard work they are willing to put in, how much discipline that they put in, and also the mindset of always being a student. And I think never thinking that they are better than the market, and so you can't be overconfident. I think the main things are basically you need to be disciplined, and also you have to continuously put in the work. And then I think after putting that work, combining it with the mindset, combining it with the discipline day in and day out, I think it is possible
Yes.
to achieve it. I think there is a lot of evidence of traders like you yourself knew. I think you are profitable as well,
Yeah.
successful as well. I mean, it's not
Yeah.
impossible, but it's definitely challenging.
Yeah. That's one thing I always like to remind newer traders as well, especially when traders hit their first, I'll say 1.5 to 2 years experience, they'll somehow reach a wall. They'll say, hey, I'm not making money. I'm not consistent. I'm consistently breaking my rules. I'm not seeing any sort of profits, no consistency. That's usually when a lot of traders tend to quit. But let me tell all of you very honestly. So, whoever's watching this video, remember, you see, Dylan is in the marketing field, and he also admit that trading is much more of a psychological, a mindset thing. So that's why a lot of people come with a different industry where, for example, if you're a doctor, once you master a skill set, once you have that degree, you have the doctor certificate, whatever, you'll be able to perform a surgery after years of experience, right? The same thing goes to trading. If you want to become a profitable trader, you have to go through the learning phase, the study phase, which is commonly the first and second year where you're just trying to absorb every single thing. Then, after you pass that studying phase, that's when you learn how to identify your own personality and behavior. And that's one thing that every traders must understand is you're not going to make it in your first year. Second year, I've seen traders achieving success within 1 year. I've also seen traders make a huge amount of success within their first year, but just to eventually go back to zero on their second year. I've also seen traders who have been in the market for 10 years but still fail. So I want all of you to have that realistic expectation to say, hey, you're not going to make it on your first day. You're going to make it probably after your fourth, fifth year, whatever. But the key thing is, as what Dylan just said, to just keep putting in the hard work, to just keep studying. If let's say you want to outperform the market, right? What are the enemies that you have? You have the institutions, you have the smartest people in the hedge fund industry, you have the banks, you have the governments, right? You're trying to compete with people like them. So how can you compete them, right? How can you outperform them? That's one thing you have to understand. All right. So, so Dylan, was there any particular moment where you feel like, I just want to stop trading? It's not working for me.
Let me think. Uh, yeah, I think the moment where I felt like that way was actually end of last year. So that was when I actually stopped trading crypto. So the reason why I actually felt that way was because the early of last year I actually blew like 2 to 3 accounts trading crypto. So during that time I actually didn't know anything. I actually just went into the market, just chasing trades, taking any trades that I think I could win. But majority of them was losses. Even though if I won the trade, it was basically small wins, nothing much to cover up my losses. Yeah, so yeah, that was the time I think I was feeling a bit down. I think I had no direction. I had went through the whole entire year without any making much progress at all. I did learn the basics of like trading, trend lines, patterns, Fibonacci's, and all that kind of stuff. But in the end, the results wasn't there. I was just constantly losing. Couldn't make a breakthrough at all. Yeah, I think that was the moment where I felt like maybe I should look into a different direction.
Yeah. So how much, let's be transparent, how much money have you lost in crypto? And also because me and Dylan, we're actually friends, so he actually had some experience where he fell into money game as well, so money game scheme. So how much money have you lost in trading and money game before that?
I think overall close to, I think 80 to, I could say close to 100K lah. Yeah, that's close to 100K ringgit, not USD. Yeah.
Yeah, so
Yeah.
that's why for majority, if you're watching this as well, whether if you have lost 10,000, 20,000, 30,000, whatever amount, you just understand that losing money is one of the journey as well. I've lost six figures in the market, US dollar. And if you are coming into the market, that's why I always say don't have high expectation and deposit as little money as possible and take trading as really just a practice thing. Because when you first started, right, all the money that I put into account are basically going to get blown up. I can almost guarantee you that almost every single good trader, they will blow up accounts. That's why when you first go into the market, don't put in $10,000, even if you're rich. Put in maybe a couple $100. Just take it as an investment of your knowledge and everything. Okay. So, what makes you decide that you want to come back to Forex, Dylan? Because you actually quit crypto trading for a while, right? Then you decided to say, I want to go back to, I want to come to Forex. What makes you come to Forex?
Okay, so let me just let you know like how I actually came across Forex and stuff like that. So basically at the time actually when I was trading crypto, I had a close friend of mine. He was trading crypto with me as well. So this isn't the same friend who earned like 5 to 6 figures a month. This was another friend who also was new to crypto as well. So me and him was trading back and forth for the whole entire year. So then when we blew up all our accounts, we basically took a break. And while he was taking a break, he actually went and looked into Forex, went looked into stocks and whatnot. Then he actually told me like, oh, Forex is actually much more stable, much more like there's more structure to it. Prices are not that volatile. Markets are not that easy to be manipulated. So stuff like that. And then the next thing was we found out about prop firms. So prop firms was something new to us. We didn't know about prop firms at all during crypto. And then during that time, we felt like, oh, maybe we could leverage the funds from the prop firms and use that big capital to maybe generate a bit of income every single month. Yeah, so that was basically what gave me a little bit of motivation to come back into Forex. Yeah, but yeah, I think that was the initial thought process of coming back into trading.
Okay. Then how did you came across me and also our trade club actually?
Okay, so this is also another friend. So as y'all know, me and you are from the same high school, so we
Yeah.
have a few mutual friends. But I didn't really talk to Neil before, but a few mutual friends. So one of my friends actually knew that Neil was trading forex. So at that time, I told my friend like, oh, I was trading forex, but I don't want to repeat the same mistakes as crypto. I didn't know who to look to for guidance and stuff like that. Then he told me, oh, actually Neil has a community and he actually is really good in Forex. He teaches people as well. So that was like, oh, okay, let me just go and check this out. So that was when I actually found out about Neil and also the 1%ers community. Then that was when I dropped him a message and I asked him about his group and stuff like that. And then that was when I said, okay, let's go. Let's just join his group and just for a month and just let's see what he offers. So after going through and then looking at Neil's story and hearing how he grew, I think it also gave me a lot of motivation. And more than that, I also felt like I could actually rely on him as a mentor to guide me, and also the community. And actually, within a few months after joining his community, I actually um, went through all of his workshops. So I joined in I think February, and I think if I'm not mistaken, your
Yeah.
community is started last year August, right?
Around August, September. Yeah.
Yeah, so from August to February, all the workshops that he's posted, I basically just went through all of it within like the whole week. Then from there, I felt like, oh, within that week, within that week of education and content and the workshops, basically I actually learned more than whatever I learned the whole year of last year trading crypto. So that was I was really shocked. I felt like, whoa, the content that he provided was like really good. So I was also
Mm,
really grateful for that. I also felt like in a way, like, oh, God sent me like a blessing and stuff like that. Like I can came across you and also your community, because I felt like so
yeah.
lost last year, and then I think the community and also your guidance as well like gave me a lot of direction and also a lot of motivation to like continue trading. If I think if I didn't came across you and the community, I probably would repeat the same mistakes as crypto,
Yeah.
but in forex, and then at the end of the day just give up. Yeah, so I think it was a really big help.
And that's one thing I think everyone should know as well, especially when you first started trading on your first, second, third year, right? A lot of times we thought we know what we're doing, but in actual, when you really go through a real education, um, or mentor, whatever, you realize that hey, actually trading is not difficult. The main reason why trading is difficult is because we are constantly trying to be dealing with the uncomfortable, as in, oh, I need to stick to the plan. I'm waking up today, I feel lazy, but I still have to do my game plan. I wake up today, I feel lazy, but I still have to do my back testing. Right? That's the main reason why trading gets so difficult, is because a lot of people, they are a good trader. They have the talent, they have the knowledge, but they just don't know how to put them into one piece. Like Dylan, for example, when he first started crypto, I believe he thought he knew everything as well. Makes sense, right, Dylan? You thought you knew everything, but to realize
Yeah,
that, hey, actually, you don't know anything. Yeah,
nothing.
yeah. So it's the same thing, because a lot of people in our trade club, they went through the same thing. They say, oh, they went from SMC, ICT. I had a period where I go through ICT as well. Um, it worked for some people, but it didn't work well for me. That's why when Dylan come into our group, right? I think the main thing that really turned on the switch is that he realized trading is a much more mindset thing, but at the same time, you need to put in a lot of back end work. For example, back testing, pattern recognition, especially not trading in the condition that you're not supposed to be involved. That is one of the toughest thing. So, so Dylan, what can you say is the major difference between the way you trade before you join our trade club versus the way you trade right now?
Okay, so let me just explain to you how I actually traded and I was trading crypto. So when I was
Mhm.
trading crypto was basically no clear cut strategy at all, but I just utilized some tools that I learned. Was basically just using support and resistance like trend lines, patterns like flags, wedges, channels, and a lot of Fibonacci's as well. But mainly where I learned all of this was basically I was following a guru on YouTube and also Discord. So I was using something called Elliott wave theory. So
Mm,
the Elliott theory is basically there's like five waves, five, what is it called, impulsive waves up, and also I think three retracement waves or something like that. So that was actually that strategy that I learned, but that strategy only worked during trading markets, and in the end, I used it, utilized it, but then in the end, I was more confused than ever, basically. So yeah, basically I was doing that for the whole entire year, and then I was winning some trades, but majority of it was just losses. So it didn't really help much.
mm,
So after I joined the committee, I basically went through all the workshops. I learned a lot of stuff, but mainly what I learned was how to correctly identify and like draw support and resistance. Basically, how I was drawing it during crypto was just drawing it basically support and resistance in terms of lines, whereas now I'm drawing in terms of areas, zones. So I think that is a more accurate way, because price does not move in like does not hit a specific price and then basically turn all the way down. It's basically a zone, support and resistance zone. So that was what I learned. So I also actually learned how to correctly like utilize patterns like mini flags, wedges, channels. So I really thought like I was doing it correctly, but actually I was doing it all wrongly. So it actually also improved my price position and also improved my like pattern recognition and stuff like that. And then another thing was basically reading price action, EMAs, all those type of stuff. And also helps me become a more flexible trader. Obviously, I wasn't just sticking to one strategy. I was a bit more flexible. I could identify support resistances, identify patterns better, how to use the EMAs better. Yeah, so I think the biggest difference in terms of now and then was actually now I'm trading more towards the key areas, towards the major support and resistances. So basically, previously I was just trading whenever I saw price go up or price go down. Yeah, so now I'm utilizing more patterns, more reversal, more mean reversion trades. Yeah, I think those are the differences that how I'm trading right now and back then. Back then was just um, enter whenever I saw something that I feel like could go up or go down, which is basically hope trading. Basically, I would say lah. Yeah. Now it's more
Yeah.
structure to it.
So to summarize what Dylan just said, right? I believe what the major difference between the way he trade last time was, first thing, he was having FOMO. I believe FOMO was one of the biggest things. So what
Yep.
is FOMO? Whenever you see a big candle goes up, you chase the market. Correct, Dylan? So you're constantly trying to get involved in the market. But as compared to right now, because but also I have to highlight this beforehand. Dylan is one of the most hardworking trader in our group. So he actually go through all our workshops. For any new members who join our community, you gain access to, I believe right now we have over 100 plus workshops, lessons, whatever. Dylan actually put in the work to study them. So if let's say be you want to grow like how Dylan does, right? You also have to put in the effort. So if you join our community, you don't put in the effort, it's still pointless. In the end, you join us, you still won't learn anything because we I believe that we also have traders who don't go through our lessons and everything. So the key thing is still Dylan was willing to make a change. That's why he realized a dramatic improvement on his trading style as well. And the second thing, the way Dylan trade right now is more to him waiting for the market to come to me instead of me chasing the market. Okay. So I believe patience also contributes to one of the major disciplinary aspect as well to Dylan. That's why he really improved a lot. And I can see as well because Dylan joined us for about 7 months. I'll say about 6, 7 months. And I can see the drastic improvement in himself as well. So after you join our community, right, what is your favorite price pattern to trade, Dylan, right now?
Price pattern. So I think probably now what I really like to trade is basically like ranging markets. So I'm my favorite type of market is basically the range market. So price moves in the range. So from there on, I can probably go short at the top, then go long at the bottom. Yeah.
Yeah.
So this is one of the like market conditions where I'm more confident taking multiple setups on. So another market would be I prefer shorting more than longing basically. So I like a bearish trading market. So I wouldn't sometimes I wouldn't really short right at the top. I like to wait for more confirmation. So I'm much more of like a confirmation based trader rather than catching tops and bottoms unless it's in the range. So let's just say
Okay.
if it's in a bearish trending market, I would usually wait for like a break and retest of a support to go short. So sometimes also price will actually hit a resistance after rallying. So I will actually go short right away. I wouldn't go short right away. I would actually wait for price to break down some supports, form lower lows, and then from there I would join in on the continuation. So whether it could be pattern formation, it could be a flag, it could be a break and retest of support. Yeah, so that's basically what I like to enter on ranging markets
Yeah.
and also a bearish trending market.
Yep, exactly. So all of you also get to hear that. You see, Dylan, from being a what we call a rifle to now being a specialist, as in he clearly know that he loved trading the ranging market. Also, he clearly know that under what kind of market condition that he is better at. And that's one thing a lot of people don't understand is that they think, oh, as a good trader, you trade across all market condition. Do you agree with this, Dylan? Do you think as a good trader, you need to trade every single day across all market condition?
No, for me, I mean, you have to really select and also choose what type of markets you prefer trading, and also what is your strength, what's your weaknesses. I mean, some people are good at catching mean reversion trades, Whereas for me, I'm much more of a confirmation based trader. So if price is reaching a resistance, I wouldn't really take a shot right away once it hits it. Yeah, so I mean, you have to really choose and see what you're comfortable with, and then from there choose your trades wisely. If you trade every single day, I mean, it's gonna be counterproductive in a way. You're gonna
Yeah.
maybe, let's just say you lose four trades and then you win one trade. Yeah, rather you can minimize that four trades and just win that one trade instead.
Yeah,
Yeah.
exactly. So being selective is one of the key things. So as a good trader, right? Well, the common misconception is people think, oh, you have to trade across all market condition, and even some of our new traders sometimes, oh, they think, hey, Neil, why don't you call trade today? But the key thing is, as a good trader, it's all about being a specialist. You are good at a specific type of market condition. So when the market opportunity actually come to you, you go aggressive. As a good trader, you have to go aggressive and defensive at the same time. You cannot always say, "Oh, I want to go all in. I want to step the pedal." There are times where you have to pull the handbrake. Okay. So also, Dylan. So, do you think it is important for you to first identify your personality first, then you can start developing your favorite pattern and strategy to trade the market? Do you think identifying your personality is important?
Yeah, to me, I think it's really important. So, because to me, everyone trades differently based on their personality. So previously, when I was trading crypto, I essentially basically you could call a scalper. So I was looking at 1 minute, 1 to 5 minute time frames a lot. So I was placing really tight stop losses and also really near targets because during that time I wasn't really patient. I was really impatient person, and I didn't really had the confidence to hold on to my trade. So I essentially wanted to get in and get out as quickly as possible. So to do that, I was actually entering with really large position sizes to win money quick, but that wasn't good because I actually blowing more accounts doing it that way.
Yeah.
So my mindset was actually just win money quick and then move on to the next trade, win money quick, enter small, large position sizes, small time frames, small SLs and big TPs. Yeah, so it was really hectic. But then later on, when I started Forex, I became more patient. Then I had more discipline. So I wanted to take things a bit more slower when I was trading Forex. And then I chose to actually change from a scalper to become an intraday trader. And also, sometimes I occasionally swing the market overnight. So currently now, I would prefer to actually ride the trend more than catching trades. So I actually follow the trend more often. And I actually prefer to hold on to my winners as long as possible. But
Yeah.
sometimes, if things don't go well, I will actually exit at break even or trim my stops uh, towards small wins. But I mean, this is what I chose to do. I chose to become an intraday trader, hold on to my trades a bit longer. So yeah, I will just accept small loss, sometimes break even, sometimes small wins. Yeah, but I know in the long run, if I continue just keep doing this and holding on to my winners, I know that in the long run I'll be able to be profitable.
Right. So exactly. So holding on to winner is such an important thing. A lot of people they do it the opposite way. That's why they are consistently not profitable, but consistently unprofitable. Is because that's just human nature, human emotions. When we have good trade, we have the urge to say, is it going to reverse against me? That's why we sometimes trail stops a little bit too fast, whatever. And it turns out our market stops you out, push all the way into 5R, 10R. So every traders we have to increase in order to become a good trader. You have to first increase your pain tolerance and to really accept and embrace the risk to say, hey, I'm willing to accept this 1% risk. A lot of people have the urge to say, I want to break even fast. Okay. So Dylan also brings up a very good point just now, which is he mentioned that he was more to a conservative slash confirmation based trader. That's one thing I want all of you to understand as well. So there are traders in my community where they are extremely aggressive, as in they go in at 10 pip stops, 8 pip stops. When price drops, they are comfortable catching the falling knife, anticipating some reversal move. But as for Dylan, he is more to a confirmation based trader as he wants the market to provide evidence first, then he participate on the second wave, down or up. So to become a good trader, you also have to first identify what exactly is your personality. Are you someone who's a little bit more timid? Are you someone who's a little bit like, I'm afraid, what if price does this, does that? What if I get stopped out immediately? Or are you a trader to say, price drops, I don't mind catching falling knife. If I get stopped out, I'm fine. Some people, when they go aggressive, they just completely melt down, and it turns out to be tilt trading and revenge trading. So all of you have to understand this important aspect. So, so Dylan, in terms of trade management, there are a lot of new traders in the market always wondering how should they manage their position. Do you think should you go for set and forget, or should you take partials or anything? Do you personally take partial, or do you close full position all the time?
I think to me it depends on what makes you comfortable. So I know a lot of traders who prefer to take partial profits when they're up. So some traders actually prefer to break even their position once they're up, and some like to take partial profits. Like for me, initially when I was trading crypto, I was actually I always take partials when I was up because I've seen so much drawdown at that time.
Mm,
Even the slightest profit actually make me happy. Even like
mm,
$100, $200 profit would make my day. But then when I started to trade forex, I would actually I initially traded a lot, and then I actually break even my position most of the time when I'm up. But then a lot of times actually price actually went down, stopped me out, continue going back all the way up, and then that would actually make me
yep,
go crazy because all the unrealized profits I could get, but I actually chose to break even instead.
yeah,
But now after like a few months, after like 6 to 7 months of being in the community, learning, improving, I actually feel a bit more confident and actually a bit more comfortable holding my position a bit more longer. So currently, actually, I would set a target, and basically, I would utilize a lot of set and forget approach if I'm really, really confident in that position. And actually, it depends. So sometimes if I'm in a drawdown, I will actually trail my stops under like key areas to protect my capital. And currently, I rarely break even my position anymore. So I think my advice to like people who are struggling to manage their position. So I think you should just do what makes you comfortable. But if you feel like the setup has like really really high potential, have really really high hopes on it, I think you should ride it as long as you can. But I mean, remember, even though the position goes into your way, but it doesn't. It's not a sure thing that you would win that position. So I think trading your stops into profit or trading into break even is still an important thing. On the other hand, I mean, if you're having a really really bad feeling about your position, and then you have analyzed up and down, and you still feel like the position is not going your way, and you still have a bad feeling about it, I mean, you should also cut your losses quickly. Don't hold on to hope and then hold your position all the way down. Yeah, I think that is also one of the main things that I actually experienced when I was trading crypto. I had no stop loss. I was just holding all the way down, hoping for price to go back up. Yeah, I think these are a few of the things that I actually came across, and based on my own experience, lost a lot of money because I didn't really manage my position well.
yeah, exactly. So I think didn't just say everything that I wanted to say as well, because the main reason why majority of traders who you lose money, right, is not because you don't have a stop loss. Honestly speaking, a lot of traders they have a stop loss, but the key thing is when it comes to losing, right, some people are just holding on to hope until one point they drag their stops or even remove their stop loss. They have an initial stop loss level, they remove it or drag it away. When you start doing that, what you're doing is you're sabotaging your own expectancy. At the same time, you are destroying your own game plan. So if let's say today you have a game plan, it is your duty to stick to it until you're proven wrong. That's why we have a stop loss in place. A lot of people think, oh, I have a stop loss doesn't mean I have to lose the full amount. But then why should you have the stop loss in the first place? Yes, you can break even, but you can only break even a trade until price runs to a point where you feel like it is impossible. It doesn't make any logical sense for it to come back to entry. Yes, then you can potentially trail stops or break even your trade. And also when it comes to taking partial, so this is a very subjective topic. A lot of people say, hey Neil, should I take partial? My answer to you is if taking partial to you makes logical sense, then do it. Trading is all about making sense. If it makes sense to you, do it. If you feel comfortable If you feel more comfortable breaking even your position because you don't want to lose money, then do it. But I would say for majority of the successful trader, they always embrace the risk and they accept the risk in the first place. All right. So as we're coming close to the interview, so Dylan has been in the market for about 2 years, 2 year plus, from crypto to forex. To repeat this again, what do you think really separate the successful and the struggling trader? Was it the mindset aspect or was it the technical aspect? So what really separates them?
I think it comes down to both actually, but I think I'm
Mm,
leaning more towards mindset. I
yeah.
mean, you can be an excellent like technical analysis trader, like you break down the market beautifully. You can even become like a market wizard, but like predicting or knowing where price goes. But the main thing is I do have the mindset to go with it to become a successful trader. Because if you have a weak mindset and if you have fear of losing, in the end, the technical ability actually doesn't really help you make money at all. Because let's just say you know the ins and outs of the market, you know everything, but you're just afraid to enter a position and hold it towards your target. That doesn't really make you a successful trader. That makes you a good analytical person. But a good trader actually needs both technical analysis and also mindset as well. So I actually know a few of my like friends who are really good in technical analysis, but they actually lack the mindset to become a good trader. So they
Yeah.
over leverage, they don't cut their losses quickly, they don't manage their winners properly. I think it's all because of their mindset as well. So they are greedy, they fear of losing, they like that experience. So to me, I think what separates like the successful traders and also the losing traders is like the mindset they have. So you could be good in technical analysis, but you lack the mindset. That doesn't make you a good trader as well. So like for example, mindset wise, so good traders, they don't um, risk, they don't over risk. They know how much they're willing to lose, and they're not influenced by greed. Whereas bad traders are like greedy, they over leverage, they risk too much. Like for example, they risk all. Okay, for example, there's two scenarios. So a good trader will actually risk only 0.5% of the first scenario, as price may actually go even lower to a lower support, and then they have two opportunities to enter a position. Whereas if you are a greedy trader, you would actually over leverage and over risk and put all your risk into the first scenario.
Yeah.
And then when price breaks
Exactly.
down and goes to the second scenario, you don't have enough money to trade anymore. Whereas the good trader, they only risk a little bit on the first scenario, so they have more money
Yeah.
to risk on the second trade. Yeah.
Yeah.
So in terms of technical, I think good traders also journal their trades a lot. So they journal the good ones, the bad ones, and also they have a game plan. So they go through their journal every single day and they identify their mistakes and improve. Whereas bad traders just enter any trade that they feel like. They don't journal their trades. They don't know what they're doing wrong. There's no way to improve because they don't even know what they're doing wrong in the first place.
Yeah.
So yeah, I think that really separates the good traders and the bad traders. So mindset is the main thing, but I think technical also plays a part. But you need both to be a good trader, to me.
All right. So I believe that's it for today's podcast. So really thank you, Dylan, for joining us on our first podcast series, not just as a community member, also as a friend of mine. So thank you so much.
Yeah,
And
thanks for having me.
yep, so for any of you, if you like the video, please don't forget to like, share, and subscribe. And I'll talk to you next time. Bye bye.